Hello everyone, welcome back to another video. In today's video, what we're going to discuss is about following a strategy based on delta divergence and unfinished auction. So at first we'll just discuss what these two concepts are in order flow, and then we will try and work out a strategy based on these two things and see how it works. So the crux of this video is that a lot of people have a misconception that when they look at a footprint chart, they need to know what is going inside each and every candle. And that's not the point of footprints. If as and when you spend time with footprints and gain some screen time and experience, you'll realize it is not the what each number that is mattering within a footprint chart. It is what that particular bar, whether it be a range bar or a 1 minute bar or a 15-minute bar, what was actually happening and at what point. So when we are looking at 1 minute bars, it makes very little sense to go inside and look at numbers within each point. So for example, what I mean by that is when we go deep, and it makes very little sense on a very smaller time frame like 1 minute to look at what the numbers were at this point. But why do we use 1 minute bar charts or candlestick charts is when we are scalping, more so, not even during intraday trades, but more so to do with scalping. If you're taking an intraday trade, that is, you want to hold a trade for, let's say, 5 to 10 to 15 minutes, what you look at is a 5-minute chart and maybe a 1 minute chart to refine your entries. Now we're going to just mix two concepts of footprint charts, that is the delta divergence and the unfinished auction, and we're not going to have any numbers on the chart, but just the lines and the areas that are plotted by them, and use them in effect to find areas where we can take a trade. Now the main idea of using a footprint chart is to have some sort of confirmation which is better than, in some sense, than a price action that is going on. So we do use price action in the sense, for example, there was a resistance here and we're looking at this part, and when the price approaches here, we would like to short it because we see that it was a support, and the markets broke down fiercely from this level. So we are expecting some sort of resistance at this level, and we want to make use of that opportunity when we are scalping. Now, getting inside the concepts, the two concepts that we spoke about, the first one is delta divergence. So by delta divergence, what we mean is, for example, if you have a bar, let me turn it black. So for example, if you have a bar that closes, we all are aware of delta. If you're not, you can go out and check out my previous videos where I have done about what delta is. So delta is, in essence, the difference between the market buy orders and the market sell orders. And for any market to go up, you need an aggression from the market buyers. That is, you need market buyers to be more aggressive and pumping in with aggression so the market goes up. If you want it to go down, you want the market sellers to be more aggressive and the market, in a sense, goes down. Now, there is nothing like there are more buyers or more sellers. The idea is the buyers were more aggressive. There is always an equal number of buyers and sellers, but if the market buy orders are more, for every market buy order there will be a limit sell order. Okay, so you can't say there were more buyers or sellers, so you have to say it as in there were more aggressive buyers. That means they were buy orders that was they were lifting the offer. So lifting the offer means when on a the depth of market or on your broker terminal, when you see buyers and sellers on your market depth that is displayed over there. So whatever is on the right side, okay, these are your limit buy orders. Okay, so this is called, I'll just repeat it. So on the left side you have the limit buy orders, and on the right side you have the limit sell orders. So when I have to go up, all the market buy orders have to consume the orders or the sellers, limit sellers, on this side, and then only the market goes up in this direction. On a footprint chart, on the other hand, what you look at is it is the exact opposite. So on the left side you see the market sell orders, this is the sell orders, and on the right side you see the market buy orders. So this is exactly the opposite of what you see on your market depth on your broker terminal. Now this is the very basic. Moving ahead, what is delta divergence? So if, for example, we have an up bar, we're talking about a scenario where the market is going up and we have an up bar, and the market has been trending to one direction, and this is the last up bar. Okay, so this is a blue bar. I will make it B, that is blue over here, that is a buy bar. So it is I mean, the open was here, the close was here, the low and high are marked over there. Okay, now what do you expect generally to happen when you have a bar like this? What you expect is that the aggression from the buyers was more, and the delta, if you would have seen, should have been greater than zero, of course, because the market buy orders should have been more than market sell orders. But is that what actually happens every time? Not exactly. So what happens sometimes is that in spite of the bar closing like this, a strong up bar, there will be an instance where the delta is not greater than zero and the delta is less than zero. So what does this indicate? Even though the aggression from one side was up, but at some point in time there has been some sort of absorption and then an introduction of the sellers from the opposite side. Now this is called delta divergence. So I will just erase everything and put it back again. So when the open is greater than the close, I mean, sorry, that's not correct. When the close is greater than open, so this is the condition. That means the bar has closed over here like this blue bar. That means it's a blue or a green bar, but the delta is less than zero. Okay, so that means it should have had the market bias more aggressive, or the delta should have been more than zero, but it is less than zero. So this is called delta divergence. There is a divergence. That means there is something amiss. Someone has stepped in and at a later time, and even though the close is more than the open, the delta is less than zero. The opposite is also true. So you can have a delta divergence wherein the close is less than the open, so you have a red bar in a sense, but the delta is greater than zero. Okay, now having said that, it is not so easy to just find delta divergences and trade. They have to be at important points. So what I mean by that is, when you're looking like this example that we spoke about, when the market went down, came up, so what do you think was happening all throughout this time? Most of the bars would have been delta greater than zero. At some point over here, we could have seen a delta less than zero on an up bar. It's not necessary, it can happen, because absorption is also a concept which we'll speak about later on, but this could have happened. Now when something like this happens, this is our trigger that some sellers are stepping in, so we can take a trade over here, and this is our confirmation that we are waiting for. Now we are going to mix not only the delta divergence, there is one more concept that I'm going to mix in, that is called unfinished auction. Now whenever a bar in a footprint chart, you see the market buy orders and the sell orders. So the market sell orders on the left side and the market buy orders on the right side. So when the market goes down, for example, what you want to see at the bottom is, for example, let's say there were 350 over here and a zero over here. So these were the sellers that came in aggressively, but someone absorbed them, and there was no buyer over here, no market buy order, and the market went back away again. So this is called a completed auction. Okay, similarly on the upside, you want to see something like 350 over here and no seller over here. Okay, I'm talking about a footprint chart. Let me write it. This is not your market depth, this is footprint chart. So these are market sellers on the left side, I'll just mark them again, and these are market buyers on the right side. Okay, so if this happens, this is a completed auction on the upside. Okay, now let's take another scenario. If you find it confusing, just go back and listen to it again and again. I will just show it on the chart as well, and then we will switch on the indicators. So I'm taking time to get you the concept right, that is what is actually happening inside the bar. Now for instance, if at the bottom of the bar we see 350 and we see 225, this is an incomplete auction. Okay, so and similarly on the upside, if we see 350 here and let's say 175 on the market sell side, this is again an incomplete auction, and we call it unfinished auction or incomplete auction. By this we mean it should have been a zero. That is how the auction ends. That is what happens everywhere. If you go to an auction, it goes on till the time the best bidder bids and the auction gets over. If it has not happened, that means this area is still unfinished, okay, in an incomplete auction. And what are you expecting? If the market goes up from here, at some point in time we might get it might come here. Okay, I will just show you this on a chart. Before I go over there to the chart, let me get one more thing very clear. The biggest misconception about unfinished auction is, just as I just said, you're expecting the market to come here if there is an unfinished auction on the downside, but it doesn't mean if it has gone like this to two bars it is going to come the third bar down. It is not like this. You will get really stopped out and really lose a plan. And the strategy that you have, if you base your strategy simply on an unfinished auction, it has to be on at a point where you're expecting this to happen. For example, if you have seen when the market goes up and there is an unfinished auction here, and you're seeing something like this, it is coming down. Now here is some place, I'm just giving an example, is you were expecting this to happen and you are expecting it comes here, fills the auction, and when you see unfilled auction and you see the other part that we just spoke about, a delta divergence, wherein the bar does close at the bottom but the delta is positive, you take a long and go on the other side. So this is our strategy that I just explained. Now we'll switch on everything and see where all did we find this on the chart. Another thing that I want to tell you, this is an options chart. I switched this on because a lot of you guys trade in options. This is a Nifty 21,100 CE, sorry, for the current expiry, weekly expiry that is. And now let's go and switch on the chart, okay, and switch on the indicators one by one. So first thing what I'll do is I will go over here. If you want, the settings are exactly the same as the previous settings. I have shared these settings previously to a lot of guys who asked me in the comment section. So they're nothing fancy, there's just a basic setting. So the delta marker is on and I'm going to switch on something like delta divergence. Okay, so I don't need the footprint in it. So if people do not understand the numbers inside, don't worry. The footprint is very elaborate in itself. On a 1 minute chart, you just need to see what happened in the bar, and you can see that with a lot of information at the end of the bar or with the bar statistics. We'll go deep into that in the upcoming videos. In this video, we're going to just talk about the delta divergence and the unfinished auction. The next one that we're going to talk about is this. Okay, so I've just switched on only these two things, and you will just see how powerful they can be. You can devise a strategy along this line. Now I will just go ahead and talk about the unfinished auction that I was talking about. We'll go here and make it double so that it is sell and buy. Okay, so what I was talking about is, look at this place. Okay, so it is plotted an unfinished auction over here. This is a finished auction, 0. This is a finished auction. This is a finished auction. This is not a finished auction. Okay, this is a finished auction. So you can see wherever there are numbers on both sides, it has been plotted as unfinished auction, and it has plotted a blue line because it thinks it's a support as the price has gone up, and if it has gone down, it is marked as a resistance. Now let's go back and switch everything off because we don't need this. We just need what we have on the chart. Let me go here and change it to single and switch this off, and now let's go. Okay, so let's go to any place. You can just have a look at the charts and decide for yourself. So for example, let's consider this part. Okay, now the market has gone down and started going up. Now the first time, okay, we're seeing there's an unfinished auction here, there's an unfinished auction, sort of unfinished auction over here. Now what I was just talking about is, you see a delta divergence after a long time over here. Okay, and what are we expecting? The first thing we are expecting is it will go down, and this is an up bar. Now what we are expecting is a sort of continuation like this. So when you're planning a trade like this, what you want to see is a pullback to the previous unfinished auction that is till this time, and you see some sort of hold up action with delta divergence or any other indicator. If I'm looking at this, I just want it to hold over here with the stop loss over here so that I can find a continuation trade. I do not get anything, and in fact this is too early to be looking for a buy trade because it has made a new low, and I want some sort of confirmation. By that I mean it should break this, okay, because I'm trying to go in for a long. I have seen a resistance right over there, a support here and a support here, so it might very well go here and then go up. So I do not like a trade on the long side at this part, okay. So the first thing, the other strategy that I mean the same strategy, if you look at the other way, is that you've seen a resistance here and you have seen a delta divergence over here, so you could have very well gone in for a short, which we just discussed. But the problem there is again that you have support just beneath the point where you're planning to take a short trade. So you always have to keep in mind the bigger picture. You cannot just blindly go here, see a delta divergence, see an unfinished auction, it is touched there, so I think it is going to take resistance and go down. Even if you do that, have your stop losses well in place. It should be just over here, and you give your stop loss and use the same strategy to find another trade. The other place that we got something like this is this one, and what we were looking at is a delta divergence on the other side, that is this trade. So this was a very good trade wherein we had a resistance over here. So a similar trade on the sell side was on the upside. If you look over here, the market comes over here. Now what we're waiting for is a delta divergence that has happened here, but there is still time to go, so we don't take one in this bar. But this bar, if you see, it is an unfinished auction and a delta divergence takes place, and you can have a stop loss over here because this is an auction where you're expecting there are, I mean, 2 delta divergences in 3 bars, and you can expect some sort of a short that can happen, and you take a short over here based on a negative delta divergence and an unfinished auction. And again, your targets can be 1:1.5. This is a scalp that we're looking for. And similarly, we move ahead, and this time we look on the downside. In the downside we have this place. So when I'm taking a short here, I know I have room till this place, so even if I get half of this, my scalp is done. So that is why I would be inclined to take a short at this point and not this one, because I have really closed unfinished auctions on the downside, and it is very likely that it can take support of any one of them. On the other hand, over here I see some gap, okay, that is taking place. So I take a short on this side, and hardly I mean it can be on a this option, 82 rupee option. You can have 3 to 3.5 points as stop loss and 5 to 6 points as your target. Okay, so this is with respect to the option with this pricing. You can similarly try it out with other options. Now the other one that we were looking for is this resistance. Okay, it's based on price action, but when the market comes here, look at what happens here. There is a delta divergence on the positive side. There is support from the unfinished auction. So this is where somewhere here we take our entry, and the stop loss, I just delete this everything. So somewhere here we take our entry when we see the POC also stuck below and we moved above it, and the stop loss is here. So the two confluences are that the unfinished auction support is here, the delta divergence on the positive side is there, and the target of course is the previous unfinished auction on the sell side. So you can look at this and you will find a lot of opportunities like this going around in the chart. Again, the important thing is something like this where you have 3 unfinished auctions in a row, okay, and what you're looking for is a delta divergence on the other side over here. So you don't get one, but you get one over here if you're not somewhere here. So this is too late, I mean, because you have suddenly a sell delta divergence on the other side, but you get the idea what I'm trying to say. So this was another trade that you could have taken. Again, it would have hit your stop loss because there's a delta divergence. This is an unfinished auction and you're looking for a pullback to the downside, but it moves up and goes to the other direction. So this does work 60 to 70% of the times. You can go and check and back test each and every trade that you would have got on this day or on any other day. And if you feel like adding another condition to this strategy. So the condition involves that this particular strategy, the condition that we're talking about is a delta divergence plus an unfinished auction. So if you want to add another condition, for example, let's say that the bar should have closed below the POC. I'm just thinking out loud. You can go ahead and employ that particular strategy and take trades of it. So have I told you all this is because it's not that you have to always look within the bar for the numbers. It's out from the outside as well. If you just pick up two concepts and one strategy, it is good enough to make you money. Hopefully this was of some help to you guys. Until next time, thank you. Bye bye.